Let's look at Autodesk. First, read this disclaimer carefully. We can find Autodesk in the Zeitgeists. Specifically, it is in... You can find it, oops, right there. Digital visualization. 3D modeling. So you can see that the performance of this themes are relatively good. I struggled a bit with what to call this theme, because you have computer vision companies here and 3D modeling. But all of them are under a broader umbrella, which we can call, the digitalization of the real world. So digital visualization, basically. Because it's all about making it actually visible, Yeah. Okay. You can see that there's a 90-ish% gain from the 52-week low, pretty close to the 52-week highs. ADSK is the ticker. Let's look at the seasonality first. You can see here that July is actually a very bad month, but August is one of the strongest, so that's quite interesting. Let's look at it against the S&P 500, like that. See whether it is under or outperforming. You can see here that in July it tends to underperform the S&P 500, but then outperform in August and September especially. That's interesting. So let's quickly just get to grips with Autodesk. Okay, so here's the company's website. We go here to the About page. So Autodesk make software for people who make things. If you've ever driven a high-performance car, admired a towering skyscraper, used a smartphone, or watched a great film, chances are you've experienced what millions of Autodesk customers are doing with our software. So here you can see, if you go here to the products, but they have just basically a bunch of different, software for 3D modeling, visualization. They are like the leading company in this space. Maya, very famous, used a lot. 3ds Max, quite extensive portfolio. And here you can see some of the applications. Media and entertainment, gaming and VR, strong trends. Architecture, construction. Here you can see some operating systems, like Windows and Mac. Workflows. I'm assuming maybe it's also usable on Linux. But of course, Windows and Mac are most popular. Simulation and analysis. So basically, these are powerful trends. Hence, when we look at the charts, since this company went public, we have a 47,000% gain. That's obviously rather bullish. We can see here that ever since 2005, this stock was in a massive long-term consolidation pattern. Then we did have a breakout, but we've had a very big breakout. Let's actually measure how big the breakout was. So this here is like the breakout level. So from the breakout to the recent high, that's like 370-ish%. So that's a pretty darn good breakout. You can see that the stock moves in this relatively clear cycle. So let's see if the cycles are consistent. Yeah, maybe a bit consistent. There are some clear cycle patterns here, except for the most recent development here, which breaks the cycle, because here you have a longer cycle, here it gets shorter, and then you have this very steep cycle pattern. You could make the case that we are seeing some signs of exhaustion. There's been a lot of move in a short amount of time, and the general trend for Autodesk is that we have rallies and pullbacks, and I would expect a pullback here at this point. I would feel more comfortable, being short Autodesk here than being long, though looking, many years into the future, then I'm bullish on Autodesk. They have exposure to very powerful trends. RSI, approaching a bit, overbought levels here. The accumulation distribution line shows us that there have been buyers stepping up. That's good. And there's a 79% positive correlation here with the S&P 500. Here with the daily data points, you can see, more clearly these cycle patterns. So here you can see that we had some pretty significant distance from the 200-day moving average. That's also the case here. And the general trend is quite obvious. It likes to revisit these longer-term moving averages. There's also this tendency actually to dip a bit below it. So there could be some decent shorting opportunity on the horizon. But to be perfectly clear, long term I am bullish on this stock. So here you can get some other metrics. Options are available, that's good, it is shortable. The price to sales is 15. PE is 173, that's quite extensive. Decent gains though. Year to date, 30-ish %. That's good. When we look at the analyst price targets, okay, so the average price target is $240-ish. It is currently trading around 238, meaning the price target is a measly 1% above the current level. So basically, like, the analysts think that, okay, this stock has kind of pushed it a bit too far. So the fundamentalists, the fundamental analysts are also agreeing that, okay, we should have a bit of a pullback. Saks.com, they are pretty big in fundamental analysis, and they have a number for sell on Autodesk. The value score, not horrible, but not a value stock. Growth is good, B momentum. The industry rank is computer software, and it's in the top 43%, which is decent. There's no dividend. The market cap is $52 billion. This is a big company. The beta is 1.61, which means that it is 61% more volatile than the stock market. Yeah, so that's some interesting numbers here. Okay, so to sum up my take on Autodesk. Long term, many years into the future, I'm bullish because it has exposure to something that it's difficult to become bearish on digital visualization. It's just a powerful trend. Computer 3D modeling, it's a thing. It has very broad applications. But we see here, for clearly looking at many years, it likes to rally and pull back. A big, huge rally, yes, I expect a pullback. Now, let's look at some other stocks here. Let's look at Occidental Petroleum. Ouch! Very different kind of a chart. But here's one of those, it makes me a bit of a contrarian, because you can see here that we have pulled back to, like, a support level we have had for a very long time. So basically this entire rally here has been completely undone. At this point, I would be more speculatively bullish on Occidental Petroleum than bearish. The problem with this business though is that long term, looking into the future, there's a lot of pressure against this industry. It is hated, and that's an issue. But this certainly is a very low level. It just is a prior support level. Let's look at Delta. Delta Airlines. Very nastily hit here by the C virus. Major pullback, then you get that bounce. There was a strong bounce in the airline stocks, a lot of speculation. Major pullback. Some interesting things happening here. We are squeezed, so we have support here at the 10-week moving average and resistance here at the 20-week. So price action is just squeezed. Look how pinched it is here this week. Very interesting. So this is one of those that will, it's bullish if it breaks out of the resistance level, and bearish if it breaks down. The problem with all the airline stocks is that it is very difficult to actually price into the stocks, what has happened, because we don't really know. We don't know how, the full long-term ramifications. There's a lot of talk now about people having to wear masks when they are shopping and when walking out in the public. So there's issues. And because a lot of economies are hurt, we are seeing some basic, conspiracies as well. Norway as an example, okay. So we are seeing that our government is making it very difficult for Norwegians to travel to other countries on holiday. And of course the argument is that it's because of the virus, but some of the lockdowns, the restrictions don't really make sense, so it is basically about supporting the Norwegian economy, which makes sense, of course. We should support our own economy, but that is kind of like the major reason why we are restricted to travel to Sweden and stuff like that, because there's a lot of commerce happening across the border because it's cheaper. So yeah, basically, yeah, I mean, and this is not simply happening in Norway, it's happening in other countries as well. Let's look at Cisco. It's one of the big boys in the tech space. Old though, but they are in the networking business, and which is a strong business. You can see that there's been a long-term rounding bottom after the dot-com bubble. Then you do have a bit of a cup and handle pattern forming here. You know, it's an interesting stock. Very clearly moves in cycles. It's interesting. Let's look at CTE Group, like that. Of course, remember to like and subscribe and share and comment on this channel, because that creates all kinds of amazing stuff here on YouTube. Okay. Wow. This has not even remotely recovered after the financial crisis. This is quite spectacular. So basically, it's been yeah, it's utterly shell-shocked since that fall. You could make the case that we have come back to some prior support levels. The banks have not really participated in the rally. The problem for many of these banks is that there is a general trend towards decentralization of the banking sector, which means that there are some powerful interests that actually do not really want there to be that many banks. It is easier to manage and plan the economy if there are a few banks. That's one of those problematic factors, but Citigroup is a big bank. I mean, I think that those banks that are at most risk are certainly the smaller ones. MGM Resorts. This is a discretionary company, discretionary business. In the recreational space, so here you can see the financial crisis completely collapsed, and you can see that it is very far from recovering, very far away from the highs. Hit very hard by the contagion, a bounce, speculative bounce, and a pullback. But still, I mean, the bears are basically in control here. There is not, on the moving averages, we have slipped below many of the support levels. There's some potential support levels from these prior highs way back here. The accumulation distribution line is showing a clear weakness, so this is one of those wait-and-see stocks. It is at a low level though. That's the only... But to make a bullish case here, you need to be like a contrarian bullish case. Maybe we have time for Twitter. Twitter, like that. Twitter, it was hit by a hack attack. Here you can see a huge inverse head and shoulders pattern. Shoulder, head, shoulder. The hack didn't really affect the stock, which I think is like... doesn't really make sense. So it's basically the rally was just speculation, people like buying a dip. You can see that the stock behavior is very erratic though. Twitter has really struggled with their effort to commercialize their platform, and that is reflected here in the stock. I am a bit more skeptical of the entire social media space at this point, because I do think that there will be a splintering. I think that you will have social media platforms for people on the political left and for people on the political right. I think that split will happen. There simply are... there's too much conflict at this point, and it doesn't seem like we have any like clear platform that is like completely politically neutral. And so basically I do think that there will be this massive division. Complicates the entire social media landscape, especially for advertisers who want to easily gain access to all customers. Whatever you do, of course, don't fight the trend, and may the trend be with you.